Let's continue discussion around that material space. Peter McGuire joins us from our Sydney CBD studio. Let's talk oil. We haven't even touched on it yet, Peter, which is very, very strange. Some interesting moves. Seeing it at the moment, what is it, $52.64, sort of round about the middle of that range at the moment. What are you seeing as the driving forces for the oil price, and who's going to win out, the bulls or the bears in the near term?
Well, good afternoon, James. I think there's still a little bit of bullish movement to the upside. Quite simply, the unknown as far as geopolitics. Where to South Korea? What happens as far as Syria? I don't think either of those are off the table in any fashion. And of course, President Trump. The US dollar's suffered a fair bit of weakness over the last couple of months. And at the moment, the unknown is, what does OPEC do May 25, James, as far as that meeting? Do they extend those production cuts for a further 6 months? They do expire on 30th of June, and that's the great unknown. So
do you think geopolitics are going to dominate the oil price in the near term, and then we start getting back to, fundamentals, US shale, OPEC, on that supply side? Yeah, I think so, quite simply because the great unknown. What happens if Syria does... do they move, with more intent into Syria? It's only been a couple of weeks since those Tomahawk missiles. I think the world's very much, got a front and centre approach as far as North Korea at the moment, but that could quite easily swing back to the Middle East. So that unknown is really causing a great amount of volatility to that market. Traders are sitting on... Easter was traditionally, it's a downtime. Trade was quite slow on NYMEX last night, light volumes, but that could really ramp up over the next couple of days, and we head into that summer driving season as well, James, over, from May, June, July into the Northern Hemisphere. What do you think?
Well, Pete, we talk about this all the time. You've got the oil rigs are up, 683, up 11. Yep. You've got the oil and gas are up 8, so 847. They've jumped 400 in North American oil rigs, over the last year. Yeah. Are we just going to be a range-bound with spikes around the fact that we really don't know how President Trump will react to the rest of the world? Is it just more of that? So it's about noise, but it stays within a range because we know that the corporate America is going to reply in response to supply. They're just going to give us more if the price is right.
Well, exactly right. Quite simply also, private equity, those funds, $19.8 billion, went into funds for the first quarter of this year, 3 times of what happened last year. So they've got a large appetite as far as the shale, what's happening as far as technology. All of those components are really forcing down those production costs in the US, and they're now number 3 in the world as far as production. So, Russia, Saudi Arabia and America, who would have thought? So that takes a different component to the market, and that's really where the shale will push stronger. There's large dollars coming into it, technology cuts, as we mentioned, but more importantly, far greater appetite. We're still addicted to crude oil, Mark, and that storyline really isn't going away.
But Pete, isn't it key around... you're right about the technology. That's a massive piece about how they're able to go back into these rigs and drill out so much more oil. So where do you think there's the growth? Where's the black swan in terms of the growth? Is it in places like China? Is it something like that where they'll say, OK, we can actually see more growth coming through Asia as they, modernise and go into more, driving cars and all that sort of stuff?
Well, exactly. All through Asia is China, but don't forget, of course, India. India, Pakistan, those large areas. You're talking, 1.5 billion people just in India and Pakistan alone. So that appetite, motorbikes coming up the curve as far as trucks, all of that is, motor cars and so on. You're starting to see the Porsches, you're starting to see the high-end vehicles now, sometimes on the roads in the likes of Mumbai and New Delhi. That will only increase with that large component as far as middle-class wealth, and that's been replicated. It's only, a decade behind China. So the appetite's there where really it's one-way traffic, and you're also talking electricity consumption, which is just, really hitting, extraordinary numbers globally as well.
Do you think, though, while we're talking about the rise of, the middle class, if you like, in some of these emerging economies, that it might not be replicated as it in the past, because at some point a clean consciousness kicks in, you start seeing the prevalence of electric cars, autonomous cars, this sort of clean energy as opposed to the previous, everyone just jump on the gas guzzlers?
Well, I think so, James, but you've still got, a large, as far as motorcycles, and they're yet to come up as far as, automated vehicles in that regard. But yes, there will be a large, the changing or the paradigm shift as far as those autonomous vehicles and electronic. But I think that there's still a good decade to run as far as Asia's concerned. That, you know, the momentum there is very, very strong, and mobility is very much a part of their whole culture. So that is just going to be where it sits, and there will be, you know, new age technologies and innovations that leapfrog the incumbent players, but at the moment that appetite is growing, you know, year on year. And does OPEC just sit and sweat on all that demand? I think they do, because quite simply also what's happening as far as Middle East, where does the likes of Iran play? If the Syria situation, there's far more to it than that. Ahmadinejad has just said that he wants to be, you know, throw his hat in the ring as far as the presidential elections. Is that going to cause another round of sanction cuts? We know his stance. They want to back Syria. So all of that unknown. Look at Erdogan over the weekend as far as Turkey, sitting on the border with Syria. So that, again, is, you know, there's a lot of, in some ways, mayhem through that whole region. So I really think that this next 6 months is going to be crucial for OPEC, and that's going to, again, cause great uncertainty as far as price.
Pete, it's Adam here from Shaw's. How are you going today?
Good, very well, thanks, Adam.
Yeah, good to hear. I just want to sort of move on from oil a little bit and sort of coke and coal. We've seen those prices sort of little unchanged over the last sort of couple of days, but we're sort of seeing some more sort of buying coming in from the Japanese. Like, do you think there's another fresh round of a buying that's going to emerge that's going to lift this coal price higher from where it is, or do you sort of see it falling from here?
Well, I don't really want to go out on the limits, you know, as far as speculating on coal prices, but I do say that, you know, Japanese, the large appetite there, that story isn't going away either. You know, the huge industrialisation, it's just gaining momentum, and not only that, but, you know, as far as steel production, you're talking electricity, all of those components are just driving price. We all understand what happened as far as the cyclone only a matter of about 3 or 4 weeks ago, and disruption as far as shipping and so on. But that seems to have sorted itself out a little bit. But the major concern is, you know, that push higher, consumption is growing, and, of course, we've got demographic growth. So whilst we all say, you know, the commodity cycle may be having a little bit of a lullaby, more importantly, you've got a couple of extra billion people on the planet over the next 20 or 25 years, and that's just growth consumption that's going to be unheralded. We've never seen growth like this as far as population base in that short period of time, Adam. And Pete, just finally, and you've sort of thrown up a lot of uncertainties at the moment, certainly risks globally. Does it paint the case for being long gold at the moment, or is that ship sailed? Well, I think you've got to be, James. $12.95 overnight on the spot market. She's down at about $12.83, I think, at the moment in Tokyo. I think you're going to get stronger. Again, those ingredients that we threw into the pie a little while ago as far as the unknowns, the geopolitics and so on, US dollar weakness, I think there's further momentum to the upside. Some analysts are saying $13.35, $13.50. I think we've just got to wait and see what President Trump does. But, yes, I think you'd have to have some in a portfolio, James. Yeah, Peter McGuire, as always, great to have you on board. Thank you. Thank you.